Warren Buffett has just given away his trade secrets at his Berkshire Hathaway annual shareholders meeting. Have you watched it yet? Well, if you haven't, I'll give you all the inside scoop right here, right now, here at Barry Charles. Welcome, guys and gals, to the channel. I hope you've enjoyed your weekend going into the next week. What is happening right here with Warren Buffett and Charlie Munger? Can we be richest on our wildest dreams? What we will learn in this video is about what Warren Buffett and Charlie Munger had to say on certain topics, some lessons they've learned that has helped them grow in the business, what's the future of streaming services, what's happening in the auto industry, and then we'll finally talk about value investing. Yes, where's the future will hold in value investing? So remember to like and subscribe to the channel and share this video all around the world. Let's get to the hot topic of Warren Buffett and the shareholders annual meeting of 2023 and what happened. Let's have a look. Firstly, let's talk about some lessons learned from this long shareholders meeting. Yes, if you don't want to watch the full 7 minutes, will give you an insight into what has happened. First off, we have the meeting with Tom Murphy. Yes, his first meeting with Tom Murphy from Disney. This is a couple of lessons he learned from this great man. He was a very good chief executive officer, a capital CEO, as well as being part of Disney as they rose to fame. He remembers his encounter with him, where one of his famous quotes he remembers from him: "You can always tell someone to go to hell tomorrow." Yes. So what does this mean? This is great advice. Basically what Tom Murphy was meaning, and Warren Buffett took out of it, is that do not screw your worst enemy. Yes, folks at home, don't screw your worst enemy. You want to be able to be you want to keep your potential suitors in your hands. You want to have them in your life. Because if you say, get the beep out of here, I don't want to deal with you anymore, you've lost that person for life. You will not get his or her business yet again, more than likely, in your lifetime. And that is a lot of money that have gone down the drain. And you want to eradicate that. Just agree to disagree sometimes, and maybe a year or two down the track, it might become more profitable for you going forward. Yes, what else he also talked about in this is that he learned, this was one of the other key sayings, praise by name, criticize by category. This is a big one in business. You don't want someone to criticize you all the time, day and night. You want someone that is your confidant, your employee, your part of your mentors. You want them to bring solutions, ideas to make your company great, which in the long run will make your stock price increase with better revenue and profit margins. His final takeaway from in general life is to be kind to one another. Because at the end of the day, you might be the richest man in the world, but if you're not happy in life and being kind to others, your legacy will be very, very diminished over time. Charlie Munger always says, spend below your means, invest the rest, and stay away from toxic people and toxic environments, and you will do well, and you are certain to succeed. If not, you are relying on a whole lot of luck. So what does this mean? Basically, is not to lose what you've already got. But basically, for the 0.1%, they're lucky enough to win the lottery. Have one stock that absolutely goes to the moon for them. 90% of those people lose all their money and wealth because they don't have the right education, or they take more risky investments, thinking they're going to double, triple their money, continue to make big money, and they end up going to bankruptcy. So that is what he is basically trying to say. You stay away from the toxic environment, you stay away from all the manipulation, and you will do well in investing. Yes, because people will invest in meme stocks, which has happened time and time again, or even in the crypto market. Yeah, Dogecoin, GameStop, Neo, Beyond, Ben and Bath. I mean, there's so many classic tales of what has happened there. It's skyrocketed to the moon, and then it's crashed and burned. Yes. What I believe is one final thought that really needs to finish this on here is that you you just have to, whatever the future holds here, from the shareholders meeting, you want to be absolutely in control and knowing where you want to go and forward with your business, your investing strategy. You need to know where you're going, and don't let the haters hate. Now let's have a look at the streaming wars. Yes, the streaming wars out there. This is something they talked about in one of their questions. Warren Buffett basically says this is going to happen for a long time to come. With so many competitors out there, profitability is going to be hard to come by. The only way to make profitability in this business is to raise up your price. And the issue they have is that the competition is so high that you got to pay the actors higher, the directors, and when it comes to the distribution, they're left with the crumbs, and they've got to make those crumbs boom, 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 and make themselves some big money. Even though they might be dealing with big money, with all this outlay on the performance, are they getting enough return to be financially sustainable? And one of those companies that are struggling with that right now is Paramount, that Berkshire Hathaway owns, with their dividend cut by 85%. Be interesting to see if they sell out, because I presume they would have bought it for the dividend. Not the only reason, they would have seen growth as well, but a main factor, they all thought they would like the dividend. And it'll be interesting to see if they do sell out of this company. Yes. So when you look at all the streaming services out there, you got obviously the big ones: Netflix, Disney, HBO Max, Paramount, Apple, Amazon, Fubo TV. And so many more. There's so many out there. There's all the sporting ones as well. So where does the market go? Where is it going? Are we going to see a few more knives to fall? That's what everyone would be hoping for. Well, not everyone, but this is what you'll be hoping for the bigger competitors if they want to be getting more profitability. Yes. Now let's have a look at what else came out of this shareholders meeting. Was the auto industry was an interesting debate here about the future of electric cars. Will it be completely the future? Well, according to Warren Buffett, maybe not necessarily so. He sort of tried to dodge the question a little bit. He basically was saying that the classic cars are here to stay, and that Americans love their classic cars, which is true. So how do you get those classic cars? So will you just straight turn them into electric vehicles? The question mark is, will they have enough get up and go that they want? Because sometimes the electric vehicles aren't as quick as the other vehicles. So that's just something, and it's a side note that they have to work on. But I think one of the biggest questions going forward is the oil. Yes, oil. Until oil has absolutely eradicated out of this world, we will still have the gasoline car. But until that happens, if that happens, then they have to look at alternatives. Obviously, electric vehicles is one of them. but there's also other ones out there that have been created in the past and been brought out by the bigger companies. So this is like vegetable oil, water. I mean, this stuff has already been created, and some of it's already been created and used by the rich people, but it's illegal for others don't. So that is the question going forward. Will these become the future? Well, water, for instance, I can't see water being the future because we're so overpopulated. If we use up all the water reserves, naturally we die. So I can't see water being the savior here. Vegetable oil could be an opportunity there. Whether enough we can produce enough vegetable oil, that's obviously going to be another issue going forward. If that's the reality, electric vehicles obviously has the battery issues of the batteries are not being really they're reusable. We can use some of it, but the lithium batteries, that's a big issue in terms of it being EV. That is the issue because you can't really renew that source. So that's an issue for electric vehicles that they have to work through. But yes, obviously electric vehicles is going to be around. Whether it's the number one, that's debatable. But I think more to the point for the future of society here is autonomous driving. I definitely believe I'd love it, but there's also the risk involved with trusting the computers to get you from A to B, and not some little chink in the road, like a little big rock on the road or a wood on the road, trips you over, you flip, you know what I mean. So that's the issue with autonomous driving, is the absolute 99, well, you want 100%, but 99.9% you're going to be safe just sitting there doing your work. So you can be working while you're driving. If you've got an hour and a half drive to work, you can be very productive and actually work. I mean, I know you can work by talking and that sort of stuff, but if you actually need to do other stuff, that'd be a perfect opportunity to do it with autonomous driving. I think that's going to be the next big game changer outside of AI. Obviously, AI is a big thing as well. AI is already here, but autonomous driving, I think, will just, boom, be huge for the industry. But at the moment, they've failed, and you're obviously seeing big CEOs pass away driving these vehicles, testing these, so there's a long way to go in that field for it to be absolutely the future. Well, let's have a look at the one of my final takeaways from the Berkshire Hathaway stakeholders meeting here was about value investing. Yes, in value. Can we, the consumer now, get good deals because of the higher competition, more people involved, less opportunities around? Let's have a look what Charlie Munger and this is what Charlie Munger and Warren Buffett had to say around these issues. Charlie Munger believes that value investing is, well, not quite dead and gone, but there's going to be a lot less opportunities now because there's just so much money available and able to move on it quickly. Basically saying we're doomed. Oh, just kidding. But on the other hand, just to give you a little bit of context about what this sort of thing is happening, I'll give you some good examples, bad examples of what is happening in the real world right now or in future or old instances here. Let's have a look right now. Meta platforms. This was the chance. This is your golden opportunity. You could have brought this stock at around $80 at one point. If you had the money to load the boat then, you're 3x your money right there, right now. And that is where the value investor comes in. They can see that the price was already right, and it just keep going on sale. Just keep buying. And eventually it'll flip on its head, and boom, you're a lot richer. So good on you if you did do that, just like myself. But the future, obviously, is one thing. Don't be tricked about people out there saying that they have 3x their money on Facebook. Most of them will be lying to you, absolutely lying to you. They'll be saying, yeah, I bought it at 80,000. Yeah, but show us your real portfolio, buddy. Did you really make all that? Yes, you made it on that particular, how much you bought there, but your whole portfolio meta, show us the real deal. And I'll tell you the real deal. Me, I had Facebook, had $300 and something, and I just brought on the way down, and it's now at about $200. Now, ideally, I would love it to be lower, but at the end of the day, you've got to have the money to put in. So one thing to have a cash pile ready, absolutely, for absolutely any stock. That is absolutely a bargain. That is one thing I tell investors right now. If you can get 10K, even more would be ideal. But if you can get just the pocket money that you know, boom, this is for investing. Just wait for the right opportunity, obviously, and just go boom in one go. Yes, boom. Or you may do it in 2 goes. But you have to take the opportunities when they're there. And if you got it at 150 and you missed out on the opportunity at 80, yes, there is that. But you still made a decent profit. So it's all about investing right. And obviously people say, oh yeah, I did it all 80, but I'm just telling you now, most of them are kidding you. But I'm giving you the real facts. This is how you make money. You just keep on. You got to realize. Give you an example of a company that you shouldn't have invested into, and this is when the hype phase comes in. This was Tilray. It's a pharmaceutical company for cannabis. So in 2018, they started up, and they were at about $29, I believe, when they IPO'd. And next minute, it skyrocketed, boom. A couple months later, $150, and then it started going down. And within a couple of months, so this is in a 4-month span, it's gone from $29, or anyway, somewhere in that $20 figure, up to $150, and dropped down to about $100 in November of 2018. And everyone thought that's a great time to buy. Boom, 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 boom. And now, if we scroll back 4 years later, pretty much all downhill, a little bit up. But now you can buy this company for less than $3 a share. So it tells you not every opportunity is a great opportunity, and you need to be smart when you're investing. Sometimes you can buy the hype and sell at the right time, but it's a dangerous game. And Bed and Bath and Beyond was a good example of, if you could time it right, yes. But you also had the issue is when a stock really crashes, they can hold the market for a couple of days, and then when you want to sell, and then you end up selling at a loss because you're too late on being able to sell when it went high. So that's always the issue when you're doing sometimes it doesn't last long enough. GameStop lasted long enough for some people to make some money. But as soon as it crashed, there's a lot of people that missed out the opportunity of getting it at a decent higher selling pressure, so it dropped right down. And so that is the issue with these stocks. You can make money, but it's very risky business if you time the market at the wrong time, like with the Tilray example. If you thought, oh yeah, well, this is going to keep going up and up and up, and you bought it at around the $150 mark, you've pretty much lost all your money. So that's just an example of what can go wrong. And Beyond Meat's another example of a similar. It's hyped up all the way to the film, but when it actually matters, money matters. Are they actually being profitable? Are they actually going? But Beyond Meat's company has just gone backwards. Less people buying it because it's not as great a product. It's too expensive. At the end of the day, you need to be profitable. You have to, at the end of the day, it doesn't matter what sort of businesses you are not going to stay around unless you become profitable. Yes, so, but there was also one more thing in this, let's have a look at the Warren Buffett side here. I think what Warren Buffett talked about here, he believed there's a lot of opportunities. Charlie Munger's a bit more pessimistic, but Warren Buffett seems to be the more optimist, if you know him well. But he basically thinks the biggest opportunities and when people do dumb things. So yeah, as said before, Facebook was an example of that. People were buying into the hype that this company's dead and gone, boom, boom. Reality Labs, Metaverse is not the future. Facebook's declining or stagnated viewer growth. It's the end of the world. But in reality, this was only little small things that weren't gonna damage the company long term, and you got a sale, and it was a great time to buy. So that's obviously something you can look into. I think yes, you have to. If you're looking at the future here to try and make some wealth here and in the future for you as a value investor, I think at the end of the day you just got to keep doing your own study, work towards finding your process. And I believe in what a lot of people are not telling you about is to be less diversified. Yes, people say it's a bit more risky, but I think you only need 10 stocks at the most, and I barely have 10 stocks. So I think you can do it. You can build financial wealth with 5 to 10 stocks. You don't need any more. It just depends on your process, how you want to go. I'm more on the growth side, as we are. Growth and value investing is where I sort of, but I also have dividend investing as well, which I probably need to do a bit more of, because you can always reinvest a dividend. I wouldn't say dividend investing is going to make you the richest, but dividend investing allows you, if you haven't got much money on hand, able to just keep adding to your stock portfolio over time. So that's obviously where you can look at dividend investing. Yes, this is the future of yourself. Seeing with I hope. Well, to me, that's enough for me around Berkshire Hathaway and Warren Buffett. I hope you've got a lot out of this video. I think value investing is here to stay. The opportunities might be getting harder and harder to be able to take that opportunity, but there's always going to be times when the stock is being not loved, with all the bad criticism around them, and it's always a good time to buy. There's still a few stocks that are in that category right now. It's not financial advice, but there are stocks out there that absolutely are bargains right now. Whether or not you have the money to make it worthwhile, because if you just get 5, is it really worthwhile? Yes or no? You really need to get a big amount of shares. I think that's something people need to focus on too. Obviously, when you're starting new, you're not going to have a lot of shares, but the focus is getting as many shares as possible at that good price. You want to get it at very good prices. Obviously, you can keep. They all say, just keep dollar cost averaging in. I don't agree with that strategy. I think once you've found the company that is great, you wait for the buying time to buy. Now, a lot of people don't have that patience, but I tell you what, that is the best patience to have. If you wait for the right time to buy, you can make life-changing decisions. And what I've learned is that you need to. Now, for example, Meta, I brought the dip. Okay, so it was at about $400 at one point. I brought the dip, and I thought then it was a good time to buy. And sometimes it is the right time to buy. Don't get me wrong. Don't get this completely wrong. But you always got to have money on the side for when a company you own is on absolute sale. And when Facebook dropped that much, basically 70%, and there's other companies in the video, another example, Shopify, a lot of these companies that were down and out were absolutely brilliant opportunities to buy for big. Will any of these stocks be an absolute game changer? Possibly not, but you never know. You never know what the next company is going to really go berserk. But that is obviously the future. Well, thank you very much for learning a bit about Warren Buffett and Charlie Munger on this annual shareholders meeting of 2023. I hope you got a lot out of it. Remember to like and subscribe to the channel. Share this video all around the world so finance gets to everyone. Thank you very much for joining me, and I'll be back with another video shortly.